Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York on Monday, 9th day of May 2016, and this is the Daily Report for Gold and Silver. After seeing a pretty moderate to moderately strong rise in precious metals prices on Friday, the complex has literally fallen out of bed today, with gold currently trading off about $30. Yes, $30 on the day, $12.6330. The low on the day is $12.63, so we are at the low of the day. The high, $12.8950. Of course, we had open positions last week. We sent out a recommendation to simply take your stop to the market. I want to thank all of the subscribers that sent me emails over the weekend asking when to re-enter the market. As you can probably see from today's downside action, it certainly wasn't yesterday nor today. Everybody at this point is out of the market. Those that didn't get out on Friday were stopped out with a smaller profit today because they kept that stop intact. So all in all, profitable trade no matter where you got out, but certainly a dramatic decline in the market today. Silver also trading lower on the day. Let's go ahead and pull that up. But silver is trading off about 50 cents on the day, below $17 at $16.96. The low $16.9380, so we're just off of the lows, and the high $17.46.9 on the day. Extreme carnage in the precious metals markets, with the markets across the board trading at least 1.5% lower. Platinum, in fact, down 3.65%. Now, with this dramatic decline, you would think that the dollar strength, and the dollar is stronger today, would have a lot to do with the most recent drop. But let me bring up the Kitco Gold Index for a second. And as you can see, I've just brought that up. When we look at gold, they're posting it down about $24.70. Only $4 of that $24 decline is actually due to a stronger dollar. And in fact, $20 plus is actually selling in the market. So we do have a lot of selling in the market. Now, how do we make sense of what we are looking at? First of all, as I said on the opening statement, I am so glad that many, in fact, the vast majority of our subscribers did email me over the weekend looking for a point to get back in, which means the correct posture was done by them, meaning they got out a little bit sooner than later and were able to pull about $20 profit out of that last trade. Now, when we look at this market, of course, we talked about the compression triangle. We talked about the breakout that occurred. Of course, we had the false breakout, which is when we got in. We saw this market ride up, but we certainly ran into some serious headwinds at about $13.50 in terms of its price point. We then had that doji small-bodied candle, and actually throughout last week, the first part, Monday, Tuesday, Wednesday, and Thursday right here, very, very small-bodied candles, and it had consecutively lower lows and lower highs, and that is what prompted me to send out that trade alert with the alternative strategy. We then had this market have a beautiful clip up about 10 points, and it did in fact close over 87, which was pretty bullish to me in terms of a technical basis, because that's what we needed to see. But lo and behold, today we have this major sell-off. Now, where can we look for support? And to that end, I've put up a fib retracement. Let's go ahead and blow this up a bit. But I've put up a fib retracement. On this fib retracement, we are in essence starting from about 32, or the low of this candle right here, up to the high of this candle right here, meaning 1305, 1232. That creates our boundary, so to speak. We talked about the fact that it was holding, at least for the better part of last week, up until really today, was holding the 38%. We had lows that went to, but not below the 50%, and you can see that right in here. And so the real important move at this point, because we have broken through 38% and 50%, the real move right here, obviously, is 61%. Now, that comes in at around 1260. The low on today is 1262.80. This is a point that we are going to look to enter the market and to initiate our next long position, is if and when, I should say, because we can't say when, but if and when the market tracks a little bit lower and we see some sort of a pivot right at this point where that would make us feel as though the market's moving back up. But we could have a little ways lower to go, but not all that much. What about silver? Silver also a pretty dramatic decline, down almost 3%, 2.87, 2.9% lower, 50 cents lower on the day. Weekly chart, even though this is only Monday, with that 50-cent decline today, look at this candle on a weekly chart. It far exceeds, of course, the move that we saw over the entire week last week. We can look to see if we find support. If this market continues to track lower, which I believe it has a little bit lower to go, I could be wrong, could find support here. However, if not, really look at about the 1660 level to re-enter silver for those that like to trade silver as opposed to gold, or want to trade both gold and silver. That would be the entry point that we would look for over the next couple of days. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.